Hi, my name's Andrew Locke, and I'm one of the coaches and mentors here at Forex Signal. Now, from next Monday, the 28th of November, we'll be hanging out in the premium members area on a daily basis. We'll be discussing charts, market analysis, daily commentary, and anything that's relevant to trading day. We also offer coaching and mentorship services, so please now click the premium members button to the left to learn more. Hope to see you in this. Goodbye. Hi, my name's Andrew Locke, and I'm one of the
Maybe shorting indices. I don't know, that sort of movement in DAX here. I was actually looking for about 30-point move higher, 40-point move higher in the next hour or so. It's not so good on a 15-minute, maybe 1 hour show. I don't think this is faking out, right? I don't think that, you have to be pretty brave to sell into that right here. Now whether we get that extra little movement, 30-40 points, that's probably just what I'd be looking for. But in general, yeah, stocks are a little bit over, in danger of a pullback, right? But we've had some pretty big US dollar selling corrections. We haven't seen stocks go with it just yet. So I'm not inclined to get too negative just yet. While dollar yen still outperforming and struggling to go lower, Nikkei is going to be well supported, and just the whole theme is going to be in place still. You'll know that the canary in the coal mine is if dollar yen makes new lower lows, and it's struggling to do that. So I wouldn't be selling stocks just yet, even though we have OPEC, NFP, Italian referendum. The Italian referendum is the most negative of all those. If OPEC doesn't come to an agreement, it's not going to be the biggest shock in the world, right? That's like, okay, well they're mucking around again. Let's just see what happens here. We'll see if we can get back above the 10.6 in the DAX. DAX is the weakest of all the majors, really. So Nikkei, if you have to pick between Nikkei, Dow, and the DAX to sell, I'd be selling selling the DAX on the back of the Italian referendum fears. But then I'd have to be holding it into the weekend, and I don't know enough about Italian politics to get the feel there. But you expect no to come out, and then what's really being debated is how negative the no vote is immediately and not. I mean, it might be just the start of turmoil, not really the. It's not Brexit or anything. It's just, okay, these guys might have a new. Renzi's going to resign, and then we might have a new election. Same sort of time as France's election. So that's where you could get that speculation. Then perhaps when the polls start coming out a little bit closer, you might get negativity. But I think that's a 2-month story. 2 months away from now, not right away. Right away, the market's still focused on US dollar strength. And if you had dollar yen continue to rally and say the euro break 104.65, the low from a couple of years ago, then you expect the stock markets to be well supported on that. With the euro falling, it actually helps the DAX, right? In US dollars terms, it's getting cheaper to buy European stocks. But yeah, there is an element there of risk aversion will come at some point, and you don't want to get caught too long. But it's the trend's pretty firm. No, I'm not going to stop you selling the indices. I don't know what sort of level you're targeting though on the pullback. If it's a medium-term trade, then maybe. I just don't know the catalyst yet, right? What's the catalyst for the stocks to start slumping? How's the quality, boys? Do I have to turn off the camera again, or is it okay? I'll wait a couple of seconds to hear the reply. Yeah, longer term's different story, Renko. If you're talking about selling. That's what my wife says, Nick. Just so cute. Must be good for the Asian girls. The burliness. Now, Trader was asking me about the euro here, whether I can buy the euro here based upon this divergence. Technically, yeah, sure, right? I mean, risk reward is there. I just don't see how it's going to rally. Now, you know, the market's short and everyone expects it to go lower, so I suppose the market doesn't see how it's going to rally here. So if you're just straight up technical, then you could say the risk reward's there, I'm going to take it. But you know what, I don't know how, why is it going to, what's going to happen here? The US yield is going to come back down. There has to be risk aversion to get the US bond market being bought again, yields to drop, and pricing out of June being the second rate hike. That's how the euro rallies, and also probably a yes vote in Italy, or market not caring too much about that. Perhaps with the ECB meeting coming up, he will start a taper, right? Use the euro weakness to get into that, you know, can get out of jail free card to start tapering European bonds, rather than giving the full, I think it's 80 billion a month until further notice, green light to sell the euro. So there is a pretty far-fetched story I just had to sing then to even talk about the euro going back to 110. Something like that would happen. So in this sort of scenario, yeah, risk aversion would be euro positive, given the market forces at the moment. Mild risk aversion, not major risk aversion. Major risk aversion, then, I mean, where's the risk aversion going to come from? It would have to come from US-China trade war, so which hasn't started yet and could start at any time, but it hasn't started yet. So yeah, I could see the technical reason to buy this. I can't see the theme, the story, the sentiment shift, the reasoning why. It would be a pretty big turnaround to happen just technically by itself. I suspect we are going to break this and go down low. It makes much more sense that we break the 105 target, one parity, at the same time dollar yen target 120. So we'll see how that plays out in the coming days and weeks. If it's going to break, it's probably going to break in the next couple of weeks too. So this is such solid. I mean, this is all you're getting after you've had this sort of rally. This is a sort of consolidation pullback you're getting. Wow, that's really aggressive. Cops on my payroll, you know, they're going around. That's not. There's a fire station. It's not even the cops. There's a fire station not too far away. That's why I have to pay extremely high rent here to be have the fire protection. Sydney is ridiculously expensive for rent in the city. So, but yeah, this is really strong. Let's have a little look at the DAX again, guys. I just want to I'm actually going to take a little long here. Going to take a little long. Am I? I'm going to keep an eye on that. Might buy a little bit lower. I mean, I'm not going for much. I'm just going for a retest at 10.6. Take some stops above 10.6, 10.620. That sort of move makes, to me, is very likely to happen in the next little bit. I just want to get the best price possible. Especially if dollar yen keeps on rampaging. Golly gosh. Which is good. I mean, I'm long dollar yen, right? I'm long dollar yen. This is all great stuff, but I want a bigger correction. I want to get more of this. I nearly got stopped out overnight. Actually, early Asia, that came back down. Stop the entries. That makes no sense, right? This is what a lot of traders do. It's what I do as well. Sometimes when I'm in profit, just to psychologically feel better about the trade. But so many times the market will touch you or stop the entry because you put your stop in a bad place. Yeah, it's so much risk reward and just like long term value to you to put your stop in a better place here. Yeah, this is just silly business, right? This is not great. You don't put your stop to entry in this market like this. I mean, you can if you had a limit order to rebuy. But if you don't have a limit order to rebuy, then you can wake up, market go down, back up, and you're like, oh, I missed it, and then sit to the sideline for another 600 points, being upset that you didn't get into your trade. So what's the other trades we got going? The short euro starting to pay off. The short Aussie is still underwater. Aussie's outperforming. Commodities is still very strong. Euro Aussie's getting crushed. Right, Euro Aussie's getting crushed. So Aussie's just basically as strong as the US dollar at the moment. So it doesn't make sense to be too negative on it. I still think it's going to go down lower. But I want to see the China story begin, right? I want to see commodities fall. I want to see some issues. Maybe some sympathy selling if OPEC don't come to a meeting. Now the 200-day moving average is very close, 75.20, and we might test a little higher if we do get wave of US dollar weakness here that the Aussie can capitalize on, but we are pretty close to the sell levels if you're into selling Aussie. Just so many pairs better than to buy the US dollar against right now. Oh shit. So I just bought a little bit of DAX there. A little bit of DAX. Just want to see us test 10.6. Where's the DAX? Stop at say 10.35. Just see what's going on. See how we go with that one. It's only a short-term trade, not a long-term trade. I'll probably close it. If it went to 10.560, I might just close it out. That would be a surprise. To me, a short-term sort of move. Pretty good at DAX, not perfect though. If you followed me a couple of years ago, you'd know that. So yes, short Aussie, long dollar Swiss. Long dollar Swiss is actually doing quite nicely. It's very much a mirror of the euro, so with a little bit of euro Swiss sass. So I like it a little bit more than I do the short euro, the long dollar Swiss there. But everything's quite high there, 1.5 lots. Alright, let's have a look at some of the trade ideas in the trading room. Let's see what we've got up there this week. Last couple of days. Pound Kiwi. We haven't been keeping it on, this little pound Kiwi. Kiwi's been a little bit cheeky like the Aussie dollar. And this guy is following the trend, so you can't be upset with him. He's selling. Let's see, his risk reward's about 1-to-1. Not the best risk reward on a pair like this. I mean, Euro Kiwi might be a little bit safer, right? I don't know about this one. There's been a lot of selling going on. I mean, I don't trust the Kiwi part of this trade. It's not that I don't like it in general, and I can see the downside potential here. It's just the Kiwi has to continue to rally, and the Kiwi, like the Aussie, is up against some resistance right now, and the pound's a wild card. So yeah, I think Euro Kiwi might be a little bit more smooth. You're selling Euro Kiwi rallies. There's no reason to rush into these trades as well, and not at these levels. but he's got a wide stop and he's got a wide take profit, so you know could get past some of that volatility. Pound Aussie short, yeah, like I said, Euro Aussie short's a little bit cleaner. Long Kiwi. Okay. Look, the US dollar strength that you're seeing against the euro and against dollar yen, it's hard for the Kiwi and the Aussie to keep ignoring that. So it'll get to the point where it may overwhelm, especially if US yields continue to rally. In theory, when US yields rally, the hardest hit currencies are going to be the highest yielding currencies, and that's the Aussie and that's the Kiwi. Something called yield compression on those is real, and you know the effective 2-year difference between US and the Kiwi, it's percentage wise is changing. It's a bigger move, right? I mean, if you've got against the euro going from 2.25 to minus 2.5, yeah, but with the Kiwi going from +1 to or plus 1.5 to plus 1.25, you know, the relative movement is a lot bigger, and it's a negative. You know, it's taking away the carry, taking away everything on the Kiwi. So, and you got central banks there that really want their currency lower too. So I don't know about buying into this. I don't know about buying into this, the Aussie and the Kiwi at these levels. Right, you're asking for trouble. Just stay away from that. Your risk is on, yeah. They're outperforming, yeah, but for how long? You want stock markets to keep rallying? If stock markets start to fall, then they're going to hit the Aussie and the Kiwi more. You know, what you've seen is Euro Aussie and Aussie Yen and Euro Kiwi and Kiwi Yen having huge rallies, and so there's a fair bit of unwind that will come through on those crosses, which are pretty big crosses, in the event of risk aversion, which will be around the corner. So it's a bit of a timing game. It's a little brief window of of Kiwi and Aussie strength, in my opinion. But yeah, let's just see if they get into trouble or not. We'll come back to those in a couple of days if they do start to move, or if the stock market starts to move, and we'll be able to see that reaction. Jesus. Is that just doing that for me? Woo-wee! Woo-wee! Look, I'm not some sort of guru or god. Monies. So that's the trade I actually wanted to take there. So I'll take that. Basically, the stops building for the last few days. I didn't really go into too much nitty gritty. Stops building for the last couple of days. Dollar yen starting to re-rally. You're probably going to see that pop up after you saw this candle here. So that was the trade that we just took before. Yeah, that was. If this was like Twitch TV, that would be like a highlight reel. You're only as good as your last trade though, so you know, you guys are becoming like, oh well, next time he says one of those trades, I'll do it. Just get crushed. Yeah, the site's actually flipping out a little bit for me, but it's back now. Dollar yen long, I like that. That was my target, Daniel. 10.620, mate. I just took it. Tropical feel. Blink twice if I'm in trouble. They're out to get me. I'm here against my will. Gold is getting a lot of attention too. A lot of my clients are asking, you know, is it safe to buy? No, it's not. No, it's not. It's look, it could do a little sneaky move above 1200 again, just to take out a little bit of the stale shorts. But I think it's going to be very hard for it to defy gravity without some risk aversion. You need a story behind it. Now, when you get a story like a global trade war erupting, go to gold. If you see Europe falling apart, go to gold, or go to gold versus euro. Gold versus euro makes a lot more sense than gold versus US dollar right now. So gold versus euro, if a lot of the issues are going to come from Europe, then I like that trade. So gold versus euro, not many brokers have it. My broker has it, a few do. I don't know if Axie and Pepper do, but go check it out. They're probably one of them might. Actually, I don't know if Pepper is one of Nick's crews. IC Markets. Check them. One of Nick's brokers should have it. I'm sure Nick will be able to tell us who has got the gold versus euro, because it just makes so much sense as a way of playing it. Good room. It's got room to move, but that wasn't my trade idea. Okay. That's good news, mate. That's very good news. What the fuck? Explosion in Haymarket, that's where I live. Like right here. That's probably what was going on before. I'm gonna go check that out, because that's like downstairs. Maybe I actually won't go downstairs, I'll stay here. But I might just, fuck me. What is that about? Wow. Multiple people injured. You know where I live, Nick? I live in Haymarket, man. Let me just pause for a sec, boys. Alright, back. It's about 2Ks away, or maybe a K away. I live on Pitt Street. That's where the explosion is. But maybe it's not terrorism, right? Could just be like a big gas explosion or something. Yeah, no, it's probably nothing, hopefully. But back to the stream. Just didn't bomb my favourite bloody restaurant, you know, then we have to bring up arms. Alright, we'll have a look at a bit of bank reports from the FXWW room. There's a couple of really good traders from FXWW who hang out in the premium room. And so if you do want to get, you know, deeper into the markets or get some real information from real players, you know, it's a very good opportunity inside that premium room or inside the FXWW. But you can't just ask, you know, the traders here. You can't talk to them. It's read only, alright? Let me just post something. Read only for most of you, not for me. I better put this in just to find out, just in case they're not on the game there. It's not terrorism from what I see, but it's it is probably gas, right? You'd think it is. I mean, who hits Chinatown if you want to cause a scene? So yeah, you got a Kerbo. Definitely gas, yeah, mate. Alright, let's get back to a little bit of dollar yenish watching. So we just closed out that long DAX at the 1020. It can go higher, it's just not the trade. Keep an eye on here on the dollar yen as well. If it rolls over, and that might cap the DAX rally if you are still in that. But we're going to look at the little outlay here. What is the big movers for the yen? And so this is from Deutsche Bank, and relative real yield spreads is one of them. So this is the difference between US and yen yields. Alright, so this is interesting. So the movement between dollar and the yen in the 10 years usually has a relationship to the price of dollar yen. Now, what they're suggesting here is that 30 basis points move, so it's at 2.3 right now, US yields, 10 years. If it goes to 2.6, then they're talking dollar yen at 120. That's very achievable, guys. That's very, very achievable. That's like nothing. The market's gone up like 70 basis points in the past couple of months. So another 30 is nothing. And you've seen how aggressive dollar yen move is. That's sort of half the reason, well, 90% of the reason. This big surge in yields. The fact that there's such a big bond bubble, and it's not like the yields in Japan are going up. They're not. They're still doing QE, the Bank of Japan. So it's the US yields which are rising, Japanese yields aren't, and you're seeing this surge in differentials, and so this relationship is extreme. So I think they do have a chart here, a little bit long. Let's have a little look. So you can see how closely it mirrors it, and the chance for it to get higher, because it's it's all on the back of that yield move already, which they're suggesting can go past, 2.5 is the target, but definitely can continue. Yeah, I would be very hesitant in being bearish dollar yen unless something changes here. Like literally, this is the main thing that you have to be watching medium term. Because there's so many exporters in Japan and so many foreign investments, every now and again you get a fair bit of hedging going on. And so, this is a huge rally, and perhaps that could cap it, the hedging. But what they're suggesting here is that the asset managers have been slow to put on hedges, and if the market feels better levels are coming, then they will be slow. Risk appetite obviously is day to day, very important. If you wake up tomorrow and you see US stocks down 300 points in the Dow, dollar yen will be down 200 for sure. And there is concerns that the yen is extremely undervalued, but that hasn't stopped it in the past, and it does have wide ranges, and it's not like the BOJ is going to stop it. Japanese government want a weak yen. We only got concerns from the Japanese at like 125 last year. So it's probably going to slow down, that last bit of the movement, the next little rally. We're still looking to buy dips to datas. I'm long in the market. I bought the pullback, but we definitely might have more volatility going forward, and I'm not going to be holding on to this too much longer. In fact, I'm not sure if we're going to bust higher tonight, so I'll just close that out here. Looking to reset lower. Hopefully we get a bigger pullback down to 110 something, but that requires stock market correction, which can happen. Just doesn't look likely right now. Alright, one more for today. Or maybe not. The getting a little bit of issues here with the computer. Maybe you guys are seeing it crash any second now. Alright, one more. So it was a relatively flashbang US dollar pullback. What is interesting is that Russia's sort of backed completely out of this OPEC meeting, and oil so far hasn't crashed. So look, you know, perhaps they're still thinking that there's going to be some sort of mini statement to help out, but I don't think you know, it's going to be a huge binary event unless they come out all guns blazing. If they disappoint, yeah, it will go down, but it's not going to be the shock to the market. If they come out with an agreement that's mild, then it might just be able to hold its own. If they come out with a big 5% output cut, Russia looking to join as well, then you will see, you know, the $55 stuff, $52 stuff. But right now it's going to be very hard to see big moves there in oil, in my opinion. They've barked too many times, OPEC, and they haven't delivered. Alright guys, good luck with your trades. Hopefully a couple of you got a little bit of that DAX business. I'm going to be back tomorrow at 9 GMT. We'll go over what happens with OPEC a little closer, and then we're going to turn our attention obviously to Friday's NFP. Keep on buying US dollar on dips if you get those nice levels. Don't think we're going to see too much volatility this week. It's next week I think we'll start to see that break, you know, if the euro wants to lead the market lower again. Alright guys, good luck with your trades.